Hello everyone and welcome back to Robinhood Stock Market Watch List group here on Facebook. My name is Carlos and today is Monday morning, January 29th, 2024. And in this video, we're going to take a closer look at this week's scheduled economic reports. And one of the reasons why we do that is because scheduled economic reports have the biggest impact on the entire stock market system. So it only makes sense that we use that as part of our due diligence and kind of work our way down. So one of our favorite websites and applications that we enjoy using is a app called investing.com. However, if we're looking at it on the website, it always defaults to the Eastern time zone. However, if you're looking at it on your mobile device, it's always going to default to your time zone. So, however, we're looking at it on the website for now, and I have it set so that way we're looking at only the United States economic reports and the most important economic reports. And there is a lot scheduled for this week. However, you'll notice that we don't see anything for Monday. So it's going to be kind of like the calm before the storm. And so it's just kind of, start getting kind of ready, get your feet wet a little bit and kind of start, strategizing. However, sometimes with this information, we can kind of predict what might happen before it happens. And so that gives us a huge advantage over most average other traders and investors, because like I said, this stuff is extremely important. And so let's take a closer look at what's scheduled. So Tuesday, January 30th, we have the CB Consumer Confidence for the month of January. And then we have the JOLTS Job Openings Report for the month of December. Now, the more rare these reports are, the more volatile that it's going to have on the stock market that day. So that kind of gives us a severity level of how intense that we could expect the volatility that day. And what I mean rare is how often does that particular report happen? So usually there's weekly reports, which happen a lot. So those are really mild volatility. And then we have monthly reports like these, which provide a very good amount of volatility. And then we have quarterly economic reports and yearly economic reports. Those just provide even more volatility. And so going into Tuesday, now we have two monthly economic reports. So we know that's going to provide a very good amount of volatility. So Monday before close, now we can really, strategize going into the next day with depending on whatever your strategy is. And so, and then again, knowing these times, again, this is Eastern time zone. These two economic reports are scheduled to be released 30 minutes after the stock market opens. So typically the first hour and the last hour of the stock market day is the most volatile times of the day. And so this is just going to be pouring fuel on the fire. This is just going to add more volatility to that part of the hour that's very, very volatile. And so this is going to provide a lot of great opportunities. And so, again, it's really important to dive a little bit more into it. And you'll notice that we'll see a couple things on the top right. We see actual, forecast, and previous. So previous is basically what the previous report was. And then we have the forecast of what everyone anticipates that it'll reach. Now, it's important to kind of compare the two. So if we compare the two, that gives us the clue: is that report going to be better or is it going to be worse? And so most reports need to be higher than the previous for it to be bullish, for it to be good, positive, whatever. Or if it's going to be less than it's usually bearish, negative, or bad. And so, however, there's two reports where it's the opposite, where those numbers need to be down, not up. And those reports are typically either the oil inventory levels, and then we have the unemployment report. Because obviously, if the unemployment report is down, that means people are working and paying taxes and whatnot. And same thing with oil levels. If that's down, people are driving, they're spending money. So those two things are good if those are being utilized properly. Other than that, everything else is usually needs to be up. However, sometimes we can run into things where good news can be bad news can be good news type effect. So that's something we could see this week, but to be determined. If that is the case, then we have to really look at things in a reverse way. However, if we focus on the majority of it, then this would be where the forecast is higher than the previous. That means that this is good, this is positive, this is bullish. And so this is, and if you're not sure what these reports are, feel free to click on it. A new tab will appear with a very, very small paragraph. That way you don't have to read a book or anything, just a small paragraph that gives you an idea of what that report is and how it has an effect on the stock market. So for example, the conference board, or CB, consumer confidence, measures the level of consumer confidence in economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in the overall economic activity. Higher readings point to a higher consumer optimism. A higher than expected reading should be taken as a positive or bullish for the US dollar, while a lower than expected reading should be taken as a negative or bearish for the US dollar or stock market. And so unless we need the US dollar to be lower, then that's the only reason why we have to flip-flop it. So if it's better, then that means that we may see good news as bad news type effect. So I don't think we're really supposed to see that this week, but again, to be determined. But again, it's important to always focus on the majority of the time. And so the forecast is expected to be higher than. So and then looking at the jobs opening report for the month of December, we see that the forecast is 8.75 when the previous report was 8.79. So this means it's going to be lower than. So now we're seeing mixed results. We're seeing one that's good, one is kind of bad, or is it going to really matter? It's right the same. Either way, it's going to provide volatility, and I would anticipate we're going to see mixed results Monday. Not Monday morning, but Tuesday morning after the stock market opens. So just not sure really which way that it's going to go, but maybe it could see that kind of a tug-of-war effect, where it's just kind of fighting both, directions. And so, we may not see a whole lot of volatility, maybe with different stock, but, this is an earnings week, which we'll get into here in another video, but where we could see a lot of, different volatility in different segments. And so, Wednesday, January 31st, before the stock market opens, we have one economic report, ADP non-farm unemployment change for the month of January. So the forecast says it's 135,000, where the previous report was 164,000. So this report is scheduled to be released 1 hour and 15 minutes before the stock market opens. And so this is going to provide that volatility before the market opens, and then we have other ones that will provide volatility after the stock market opens. And so this definitely, so the unemployment, it's not an unemployment, this is an employment change. So adding jobs just as non-farm jobs. So there's just not as many jobs as they anticipated. And who knows, they could throw the whole immigration thing in there. I mean, just adding more, people in here, and just maybe there's just not enough jobs. I mean, as you can see, we'll see here that unemployment is really, really low, and so there may be now more people than there are jobs. So who knows? Well, to be determined. We'll see what the news will say. But the nice thing is we can be prepared. That way we know what's going to happen before it happens. We know the days, we know the times. So be ready. And again, that just provides us a massive amount of opportunity that gives us a huge advantage over the average trader. And so after the stock market opens on Wednesday, we have the Chicago PMI for the month of January, which is 48.0 as a forecast, where the previous report was 46.9. So this is looking positive. So maybe before the market opens, the market could be down, and then the market could jump up right after the market opens. And then this report is scheduled to be reported 15 minutes after the market opens. So it may just add a lot more acceleration to that momentum. So be ready. And then an hour after the stock market opens at 10:30, we have the crude oil inventory levels. There's no forecast on here, but it's very easy to predict. And the reason why it's easy to predict without having a forecast on here is because this is a weekly report, for one, and so for two, it bounces very volatile, and so it was down a lot, negative 9 million barrels, meaning people are driving, people are spending money, gas prices are low, and so the oil inventory levels are down, and so that means that they're going to bounce back up. And so when they're down, again, oil inventory levels, that means that's positive, that's bullish. But if they go up, then that means that's bearish, that's negative, because they need people buying oil, gas, they need to be driving, flying, and whatnot. It helps the economy. And so I would anticipate some bearish characteristics with this economic report. And so basically we have one bearish, one bullish, and another bearish economic report. So the next one is going to be towards towards power hour, right before close. We are going to have the government's going to have their meeting, their statements, and they're going to decide whether they want to begin lowering interest rates or just kind of watch and see what happens. And so, but so far, this is saying that it's forecast that they're not going to change anything, and this forecast is pretty spot on with these interest rate predictions. And so, however, it's important to know the cause and effect. So, lowering the interest rates may seem like a good thing on a consumer side. So if you're on a consumer mindset, that's great. Now you can buy things with a lot less interest, yada yada. But on a market and an economic standpoint of it, so if you start lowering interest rates, what happens? Now all of a sudden these people out of the woodwork come out that have stellar credit. These people are like 700, 800 credit score, and these people have been waiting for last several years, waiting for the interest rates to start coming down because they bought their vehicle or their house or whatever during COVID or before COVID when interest rates were really low. And so now they are, maybe they got, more miles on their vehicle now than they want. Now they feel like they have to, or they need to get a different vehicle, but they've just been kind of holding off, waiting for the interest rates to come down. So if we continue to have a low supply, and we may not have as much of a low supply as we do, as we did a year ago or a couple years ago with certain things, but there is still a low supply in certain things, whether it be vehicles or homes or whatnot. And so if we continue to lower the supply of things and increase the demand, because there's still other buyers out there, like payment buyers. They don't care what the interest rate is or whatever. They're still going to be buying. We just have these other people that have been holding off, and all of a sudden they come in mixed in with the other buyers. Now we have more buyers than we did, and the supply goes down. What happens when the supply goes down? Interest rate goes up. So that's why it's really, really important that the government has to be very careful on when and how they're going to lower this rate. They need to kind of do it gradually, maybe nonchalantly or whatever. Now, I did see that we do have, I believe, 8 scheduled meetings for this year. So we have 1, 2, 3, 4, 5, 6, 7, 8. So I'm going to repeat these dates. So coming up, January 31st is the first interest rate meeting for this year. Second one is going to be March 20th, 2024. Next one's going to be May 1st, 2024. Then the next one will be June 12th, 2024. Then the next one will be July 31st, 2024. Then the next one will be September 18th, 2024. Then the next one will be November 7th, 2024. And then the last one for this year will be December 18th, 2024. Now, they could still lower interest rates, even though there is a forecast here. They could, start and surprise everyone, and that could easily build the momentum where they could possibly lower interest rates 0.25%, every meeting. If they did 0.25% every meeting, then they would lower it by 2%. And so, but all to be determined. But it is important to know these days and times, because they're going to provide a lot of volatility these days, but also it will affect our economy. So going back to the our scheduled economic reports, that again was Wednesday, January 31st. We expect a lot of volatility during power hour during that day. So going into Thursday, February 1st, now this is a new month. Now, typically what we're also going to see during a new month is we usually see a lot of like sales and delivery reports with EV or electric vehicle companies like Tesla or NIO. And so this helps provide the public and investors an idea of how well the company's doing, with sales and delivery and whatnot. We're not going to see really financial, reports, with those types of numbers. It's just, but it gives us an idea of what the financials might be, and so, and when it comes to EVs or even in the car business, a lot of times, they'll say, it's a lot of times it's all about volume. You do volume and the revenue and all that other stuff will come in later. And so, and they're manufacturing a lot. Like Tesla, for example, has been manufacturing 400, almost 500,000 Teslas, every quarter. And so that's huge, record breaking. And they're still building gigafactories. We still got another one in Mexico that's being built. So we definitely go on that. So let's go into Thursday, February 1st. So again, just know EV stocks are going to be volatile both these days, Thursday and Friday, because some may release these sales and delivery reports on both of these days. So just know, on what to expect. Other than that, we have the unemployment report, which is called the initial jobless claims. That looks like it's scheduled to be released 1 hour before the stock market opens. It is anticipated to be less than the previous report. We have a forecast of 210,000. The previous report was 214,000. So this is bullish. This is a positive thing, unless good news is bad news. But other than that, this is good. This is very, very low. And then we have the S&P Global U.S. Manufacturing PMI for the month of January. It's scheduled to be released 15 minutes after the stock market opens. Again, this is like just pouring fuel on the fire. It's just going to make a very volatile thing, and I love this because I'm one of those people that love to straddle. If you're not sure what straddling is, it has a stock option thing, calls and puts. You bet a stock goes up with a call, you bet against the stock with a put, betting it goes down. Straddling is doing both, and it doesn't matter with certain stocks whether the stock goes up or down, because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So if you lose 100% on one side, your gains on the other side could be 200% or 300%, 500% or 1,000%. It just depends on the scenario and the stock and everything. And so, but going into a day with a lot of volatility, it's like it doesn't matter which way it goes as long as it picks a direction. It's like bring it on. It gives us something to work with that we can profit from. And so rather than just picking one direction and then hoping that you made a good choice, you pick both directions and it gives you something to work with. And that way you can utilize the one where you have a lot of profit in, and then that way you can try to either cut your loss on the other one, or try to make your loss minimal on the other one. And so, but this is a great week for straddling. This is a great week for volatility as well as day trading. I mean, this is going to be an amazing week. I'm so excited. And so then we have, it looks like the, other than the S&P Global Manufacturing PMI for the month of January, it does show that the forecast is 50.3 versus the previous was 47.9. So it is higher. And so this is, again, more positive or bullish results. And so far we have two bullish or positive economic reports right here. Then at 10 o'clock, we have two economic reports, which is 30 minutes after the stock market opens. We have the ISM manufacturing PMI for the month of January, and then the ISM manufacturing prices for the month of January. Now, the manufacturing PMI is 47.4 as a forecast, and then the previous is also 47.4. So we don't know exactly, but it's probably just something to be determined, basically. And then with the other one, though, it does show it's going to be a little higher than the previous. So the forecast is 45.6, where the previous was 45.2. So most likely Thursday is going to provide a very bullish day, but also it depends on the earning reports from the previous day as well as that morning. So again, earnings is going to be another video we're going to do here shortly. But then we have Friday, February 2nd, we have the average hourly earnings for the month over month for the month of January. All these reports look like they're scheduled to be released 1 hour before the market opens. Now, typically, the economic reports we'll usually see Tuesday, Wednesday, Thursday. We don't usually see economic reports on a Monday or a Friday. So it's nice that we do see economic reports for this Friday, just adding more volatility, more fuel in the fire here for more opportunities. And so this report looks like it's going to be a little lower than the previous report. And so the forecast for this economic report is 0.3%, where the previous was 0.4%. And so the non-farm payrolls for the month of January is forecast to be lower than the previous at 173,000, where the previous was 216. So that's another bearish report. Or negative, however you want to look at it. Then we have the unemployment rate for the month of January was at 3.8, where where the previous was 3.7%. So this is higher than the previous, which would be a bearish. So this is a negative. So all three of these reports look very bearish. So hopefully, from what we're seeing here, Thursday will be just really, really bullish. It'll be the bullish day of the week, and then hopefully Friday, everything will just plunge, and it'll be the bearish day of the week. So, and then we'll see some pretty, interesting volatility. Like I said, Monday, not a whole lot scheduled other than some maybe some weekend news that it may intake. That it may have to try to absorb a little bit, and then as well as some earnings that will be coming up soon, as well as a lot of investors will be preparing for. Other than that, there's Tuesday. Looks like there's some mixed results, and then Wednesday, like I said, looks pretty mixed as well. And so and a lot of things are going to be, and it may kind of wait to see what the government's going to say within their statements, conference, and then their interest rate decision. However, with anticipating the interest rate being where it is, a lot of investors are just probably going to relax. They're not going to really think of it as a big deal. So we may not see a whole lot afterwards. We may see a little volatility, right then and there, but it'll stabilize back to its course. And so this is the economic reports video. If you guys ever have any questions, feel free to message me, or you can also message in any of our live chat rooms.